Autoline Daily is brought to you by Bridgestone, passion for excellence.
Here are today's top headlines. China cuts down on car imports, GM cuts its production forecast, and Saab might get sold today. Up next, we'll be back with the news behind the headlines. This is Autoline Daily for Friday, June 12, 2009, and now the news. New car sales in China are booming, but most of those sales are coming from its domestic industry because, according to Gasgoo.com, car imports in China have dropped by over 30% this year. It's mostly attributed to China's tax policy that encourages consumers to buy vehicles with a displacement of 1.6 liters or less, but a majority of the vehicles imported to China have a displacement of 2.5 liters or more. The Wall Street Journal says car sales in China will be up 5 to 10% this year. More importantly, it says Chinese suppliers are boosting their quality and efficiency. The supplier market is expected to grow from about $133 billion today to $350 billion by 2015. About 30% of those parts are expected to be exported. But Chinese suppliers are also looking to buy other suppliers in North America and Europe. Meanwhile, back in the States, WardsAuto.com reports that GM scaling back its optimistic third quarter production estimates. The company initially said it planned on producing about 560,000 vehicles from July to September, a reduction of almost 36% from last year, but the new build schedule trims that figure by nearly 60,000 units to right around 500,000. This contrasts with Ford and Toyota, who are both modestly up-boosting their output. Ford's boosting third quarter production by about 42,000 vehicles, while Toyota plans on building around 7,000 additional Priuses per month for the next 6 months. And GM may announce today that it is selling Saab to Swedish super exotic sports car maker Koenigsegg. According to the New York Times, the two companies are close to completing the deal. Swedish news reported that a group of Norwegian investors is also involved with the sale. But to me, it's hard to see how Koenigsegg will turn Saab around. Last year, Saab sold fewer than 100,000 cars, which is less than one-half the output of just one assembly plant. The cash for clunkers bill in the U.S. is coming closer to fruition. The U.S. House and Senate reached a deal yesterday. According to the Detroit News, $1 billion will be appropriated for the program from a $106 billion bill to help fund the operations in Iraq and Afghanistan. The $1 billion is expected to last through the end of September, but it's estimated $4 billion will be needed to fully fund the program. The agreement reached yesterday includes everything that was in the House bill, and it's expected to be voted on and enacted next week. Coming up next, let's take a look at what some of John Mendel from Honda had to say last night about Chrysler's new management structure on Autoline After Hours.
Changing tires out here could be dangerous, but with these tires, I don't need to worry.
Bridgestone.
Last night on Autoline After Hours, we got to talking about how Chrysler has promoted its brand managers into CEOs of their brands with full profit and loss responsibility. John Mendel, Executive Vice President at Honda, said he likes the idea, but there are pitfalls they're going to have to try and avoid. Like, how do they prevent the brands from competing against each other on their media buys?
Somebody's got to manage that, which says he's going to have a pretty firm control over the brand's entirety, or else it won't work.
The dangerous thing, though, is that the brands are competing against each other within a company.
That's absolutely true.
And
with very limited resources.
That's right.
And here's what happens. I mean, having been a part of some experiments like that, you find out that after you bid each other up for advertising dollars, that your competing in-house parent brand just cost you another $500 million in advertising. Because they really wanted the, a certain event or a certain strategy but they couldn't afford it, but you could, so you just cost each other a ton of money.
Yep.
Yeah.
You can watch the entire show on our website right now. Just check out the John's Journal section at AutolineDetroit.tv. And that's it for today's and this week's top news in the global automotive industry. Thanks for watching. We'll see you Monday.
Visit our website for even more great content all week long. Autoline Extra, John's Journal, podcasts, and even more. So click over and get the inside view at AutolineDetroit.tv.